Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
A discussion with someone where all of global Wall Street leans forward. Ian Lyngen is with BMO Capital. And of course, on the bond markets, you got Belsky's optimism on equities, all that. Ian Lyngen on the Basent effect right now. Ian, thank you so much for joining. Do you have a vector in place, as you did 9 months ago, of a 10-year yield that will slide below 4%?
Yes, I still see the path of least resistance for 10-year yields being lower, not higher. And I think that the decision about the Treasury Secretary has been appropriately read as a net positive for the bond market. I think that this particular move does have a little bit further to run, but I don't see 10s going to 5. I see us going below 4%.
4.29% right now is a handle on 10-year yield, Paul.
Exactly, Tom. So, Ian, how do you think this Fed is going to proceed here with this December meeting coming up here? Given some of the economic data that we've seen already, we're going to get some PCE data later this week on Wednesday. How do you think this Fed's going to move here?
Well, I do think they're going to cut 25 basis points in December. They also are going to offer a new updated dot plot. And I think that that's the biggest risk. And that's because the debate in the market at the moment is whether or not terminals should be revised higher simply because of the results of the election. The Fed has told us that it's too soon for such a change. And so I suspect that the market will get a dovish cut, if nothing else.
How about going forward here? I mean, again, as you mentioned, the election has had a material impact on this market and on the economic outlook of a lot of participants in this market. How do you think the election may or may not impact kind of where this Fed goes?
Well, at a minimum, the Fed has already acknowledged it's in the process of normalizing rates. And there's a very big difference from the Fed's perspective between normalizing and easing. The economic data is on reasonably strong footing, so they don't have any urgency to move back to neutral. However, it won't be until the second half of next year that any potential policy change could come from the FOMC based on what Trump does early in his presidency. Yeah. And it is worth noting that there's tariffs are one-off increases, and they're not the type of demand inflation that the Fed worries about.
Lee, on the heart of your note, and folks, it's the densest note on fixed income on Wall Street, acclaimed by all. Buried in it is looming month-end bond demand. Is it foreign appetite? Is it domestic? Is it Fidelity or BlackRock need to touch up their portfolios? What do you mean by looming month-end demand, price up, yield down?
Well, it was a refunding month. And so that means that we'll have new bonds being added to the benchmark index, which implies that even someone who wants to be neutral on duration is going to need to buy into the end of the month. That's true for real money domestic players, and that's true for any overseas buyers that are based off of a benchmark. As a theme, though, we do tend to think of looming month-end demand being more of a domestic affair as opposed to being a strong overseas story.
So stepping back here, what was your take when you see the nomination of Scott Bessent for Treasury Secretary? Is it as simple as, well, there's an adult in the room and maybe take a more measured, look towards tariffs? Kind of what do you think the market's discounting here?
Well, I think that was a knee-jerk response. And the perception is that he will be a more balanced, methodical, thoughtful Treasury Secretary than might have otherwise been at risk. And there's also this observation that he's already made about taking a gradual approach on the tariff side. And if he's successful in being able to orchestrate that, that could take a lot of the shock and a lot of the tension out of the process as we recalibrate on the global trade stage.
Link your tone of price up, yield down with Belsky's tone of a solid equity market? Is it just, Ian, our underestimation of continued ample real GDP and surprisingly good animal spirits as signaled by nominal GDP?
Well, I think that the case for outperformance of the equity market can be made, and I'm on board with Belsky's expectations. If we're going to be moving to a familiar, doesn't have to be particularly lower rate environment, but if we don't have a spike in 10 and 30-year rates, then equities can continue to grind higher from here. My biggest worry for risk assets is that we do see a spike in term premium, a spike in break-evens, and more reflationary angst that gets us to an October 2023 moment where we saw that correction lower in stocks.
See how Ian did that? I mean, Brian, for next year, he's only going to be called Belsky. It's like share.
Exactly.
It's just like Belsky.
Yep.
It's just this
we'll all know.
one word. Ian Lyngen, thank you so much. What a team it is at BMO Capital Markets, and there are many different parts. The Bank of Montreal, of course, BMO Capital Markets.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I love doing seminars with Frances Donald of the Royal Bank of Canada. She writes a very terse note, always wrapped around the core function Y = C + I + G plus export-import dynamics. She darkens the door today, visiting us from Montreal as well. Nominal GDP to me has been the great miscall this year. Can you, with your K-shaped theme, with the American exceptionalism, with the Bessent Treasury Secretary celebration, can you model nominal GDP above 5% 12 months forward?
Oh, well, that'll depend on the size, scope, timing, and sequencing of a whole lot of policies that are going to come down the lane.
Or will they be delayed?
Will they be delayed? And, in my almost 2 decades of doing this, I know that I can't rely on Washington probabilities to dictate my economic forecast. What we do know is the direction of a lot of policies that are going to come in and maybe skew our forecasts. And problematically, Tom, some of them are growth positive, deregulation, corporate tax cuts, and some of them are growth negative. Things like tariffs, or even, and we don't talk about it enough, immigration policies and the risks to lower labor supply. So at the end of 2025, depending on the sequencing, we could very much have an economy that's doing quite well, where animal spirits have helped lift confidence and small business confidence, which I'm acutely focusing on, and the Fed will have to be thinking about hikes, not cuts. The flip side of that is if the sequencing is different, we could see us trip this soft landing and have a Fed that continues to focus on cuts. And that's not me not having conviction in a forecast or refusing to make a call. It's me acknowledging that the tails around our calls are much fatter, and every corporate, every household, every market participant has to take a look at a broader set of scenarios now than they were a couple months ago.
With some hindsight here to the labor data, what has the migrant influx of people into this country over the last several years, what has it meant for the labor market and our economy? Because now it's front and center yet again, but maybe on the other side.
This is such an important question, and thank you for asking it, because I'm frankly more focused on immigration policy than I am on tariffs.
Okay.
Tariffs are a price level shock. We got a playbook for tariffs. We generally know what happened. Every economist with their salt knows a ton about washing machines from 2018, but that's not what's going to keep an economist up at night. That's a one-time inflation shock. What worries us is labor supply shortages and persistent wage growth. That's the type of more nefarious inflation that creeps in and requires much higher interest rates. And we are heading into a period where we expect to see, we've already seen record retirements. We have 3 retirees for every 1 new entrant looking for work in the United States. It is really skewed.
Why is that? What's the why on that stunning statistic?
It's just demographics, Tom. People get older and they retire.
Post-COVID? No, they do, really?
That's what happens. It's hard for us to accept. But no, it's demographics. And my whole life demographics is something that we thought about as being relevant over a 5, 10, 20-year horizon. It is relevant in 2025. It's also why that unemployment rate is staying very low. It's mechanically pushing down, and it puts pressure on the Fed.
Paul, Dow up 1%, up 450 points. NASDAQ up, SPX up 0.7%. Just Apple is one model up $2.50. We call that 2 5/8.
Okay,
in the old days, 232.
Talk to us about this K-shaped economy. What does it mean to you, and how problematic is it for the broader economy out there?
Well, it depends who you are, but one of the big challenges over the past year is if you were running any type of model based off of a data point like the ISM or consumer confidence, which weights every participant in that survey equally, you and I get the same weight. It looked recessionary, and that's because small businesses and low-income households have been in a very real recession. It's not just sentiment, it's not just that they have bad expectations, but any data point that actually captured the economy as a whole that was in real dollars looked just fine. And the trap was focusing on those standard indicators that weighted everybody equally, because high-income households and large corporations, they are the drivers of what happens next. If you're the Fed, this is a problem though, because you really would need 2 monetary policies to help those who are struggling and require much lower rates, and then the resilient CEOs, the large households, or large companies, they actually could probably merit rates around 4% or above. So the Fed's going to have to make a choice. Does it target the aggregate of the economy and let one element lag behind more significantly than it has in the past? Or does it say we actually need to be a little bit, quote unquote, fairer in the way that we look at this? I think the challenge is that inflation runs off of the aggregate, not the individual. This is going to continue to muck up a lot of our statistics and a lot of our models, but at least now there's more of a general realization of why standard economic models hasn't worked for us in the past year or two.
Scott Bessent nominated to be Treasury Secretary. The markets seem to like it this morning. As an economist, do you read anything into it, or are you kind of thinking more just bigger picture?
All I want is less uncertainty. We are still in a massive uncertainty shock. Even though we know the outcome of the election, we still don't have a good sense of what the next 1 to 2 years is going to look like. So this is one of these weeks we're getting a huge amount of economic data, and I almost don't care, because I'm looking for clarity on politics next.
Don't say that. We need people to tune in at least through Wednesday. Go. You don't care?
Well, listen, I care about PC. I care about where are we stating right now, because we do want to know, is inflation already too hot? That'll be really key for the Federal Reserve. But broadly, the focus now turns towards what is the path for the next 1 to 2 years. I did not anticipate a few months ago that we would be talking on our teams about 2025 rate hikes. That is not our base case, but we are now having to discuss. We've got, a vision for what rate cuts could look like and a vision for rate hikes at the same time. Two-sided risk to a lot of economic forecasts right now. So any clarity I get is welcome clarity, and I think clarity for markets as well.
Help me here with the Canadian elections. I don't want to get you in trouble with the General Counsel of RBC, but is there a Trump equivalent on the Conservative to go after the Trudeau politics of Canada?
Well, there is an anticipation that there will be a new election in Canada at some point.
So it hasn't been called yet?
It has not been called yet.
It's like those crazy British.
Yeah. Exactly.
But at any point, again, we're looking for more certainty for what will happen next. And just a reminder, Canada is not in the same shape as the United States. Productivity is really severe. They've cut immigration. We're actually going to see population declines in Canada in the next few years. That is a very weak economy on the precipice of recession, and a Bank of Canada that's probably heading down to 2%. Right. So those factors are going to be the dominant stories in Canada, election or no election.
But the Winnipeg Jets keep winning.
Well, there's some good things going on. You're right.
That's right. Tell me about like Vancouver in British Columbia. I mean, you fly out there, every second week or so?
Well, here's something. Taylor Swift is ending her concert tour, the Eras Tour, in Vancouver, also known as the Emerald City. So they'll get a little bit of a boost there.
Are you going?
Me too. I got to experience it in Toronto, but we're proudly Canadian getting the last Taylor Swift Eras Tour.
And now, folks, with Francis Donald and Lisa Mateo, we brief you on Wednesdays, Moana 2. Are you you're taking the offspring to Moana?
No question. Right? Why not have children except to bring them to the movies you really want to see but can't go alone to?
Right. Yep. Okay. You think so, Lisa?
No, she makes up a great point, because you don't want to go by yourself and just say, like, hey, I'm watching an animated movie. Your kids are the excuse.
Really? I didn't know that. Do you know how far back I go? Like Cinderella?
Oh, yeah.
It's like ancient
and white.
history. They did it by hand. Now it's all razzle.
Now it's
like
on CGI, yeah.
yeah, Kung Fu Panda.
You're not taking a soldier guy, are you? He's not going to go see Moana.
No, he's not.
No,
gonna
not
go
at all.
Yeah, come on.
Not
Can't
at
get
all.
him. Can't get
My
him out of
son's
bed. Francis Donald, thank you so much with RBC Capital Markets.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Joining us now, William Lee, Chief Economist at Milken Institute. Bill, this could be a 3-hour conversation. Let's cut it short. What do Trump tariffs mean for Beijing?
Oh, it's going to mean a change of life from where it was for the last 4 years. One of the things we have to remember, Tom, is that the Make America Great objective has really one ultimate objective: maximize domestic employment and income. Right? That is the feature that we have to keep in mind, and Beijing really realizes that. Up till now, President Biden has been emphasizing getting everybody together in trade pacts, multilateral trade pacts. He's had some difficulties negotiating them. But Donald Trump is a deal maker, and he goes for not only bilateral deals with countries, he goes for bilateral deals with companies. So I think Beijing is preparing itself for a whole bunch of company-specific deals, sector-specific deals, and I think that gives him flexibility. You can really tailor, that same industry. You can negotiate with Korea, and you can negotiate with Taiwan on semiconductors, and have two different deals that try to benefit both. So I just came back from a meeting in South Korea not so long ago, and they were really excited about having more and more U.S.-China trade tensions because they trade with both sides.
Okay,
and these bilateral deals will let them do that.
You're on the IMF desk, as you were for years. What about magnitude? Lighthizer and Trump want magnitude large tariffs. The Treasury Secretary designate does not. Does it make a difference if Bill Lee gets a marginal or a massive tariff regime?
Well, Tom, as you know, as a deal maker, the one thing you never negotiate is your final position. And right now, the opening round is massive prohibitive tariffs. In fact, we had heard him say, if it takes 100%, great. If it takes 200%, I'm going to put them in. But that's the negotiating opening ploy. And what the objective, as I said before, is to restructure trade routes, restructure trade pacts, and restructure the U.S. manufacturing base in a way that replicates more supply chains domestically and friendshoring. And these tariffs are one way of negotiating that. Remember, Tom, restructuring America is both a Democratic and Republican objective, right, to maximize that domestic income and employment. And I think President Trump is going to be using trade policy as a tool. As you know, Tom, I come from a tradition of Bob Mundell and Carlos Rodriguez and BMO Calvo, where in a distorted world, and Kelvin Lancaster's world of the second best, where you don't have free trade, putting on tariffs or renegotiating industrial policy can make countries better off because we come in a distorted world where there is no free trade. There is no perfect competition.
So where is the concept of free trade? Was it ever a reality, and is it now gone for the foreseeable future?
If you go back to the days of Alexander Hamilton, right, he already put the stake in the heart of free trade when he said, we've got to build up U.S. industries. We cannot depend on the U.K. for manufactured goods. That alone, I think, goes to show that we never had that world of free trade. It was only taught by people like me when in international economics and undergrads to give you a baseline model for where it is that we could drive for. But I think the minute you hit graduate school, you learn about the world of the second best, where in a world of distortions, adding on a distortion can actually make the world better off than before. And I think Donald Trump has been saying that all along, and President Biden has been on too. The CHIPS Act and the subsidies that we've been giving to build plants in Arizona for TSMC to come here was the lesson that we learned from COVID, that we cannot depend on one source for supply chains. My former boss, Jane Fraser said at a Milken meeting, the problem with ESG is that we're missing some S's. We need some stability and safety and soundness to our supply chains. And I think that's the heart of the message that President Trump is also trying to emphasize.
How valid is the argument that tariffs are inflationary on the U.S. consumer?
Well, Paul, I guess I hate to be the econ teacher again, but a tariff, even with retaliations, is a stepwise increase in price levels. Right? In order to get inflation, we need continuous increases in the price level. And so we can have higher prices, but not higher inflation due to tariffs, unless we have repeated rounds of retaliation.
Dr. Lee, and I'm going to get a little nerdy here, folks. The people that invented this, again out of Columbia, was Barrow, Professor Barrow, and a guy named Xavier Saleh Martin, who wore the bright, that's where Dan Ives got the sport coat thing going, is the sport coats of Saleh Martin. And their work is that in America, the people hammered by trade converge towards where the better part of America is. Now we have a Trump of grievance, a Trump of so many people in America have missed the boat on free trade. Is that academics, Bill Lee, still in place, or is it a new regime after Barrow, Saleh Martin?
I think we combine both of those elements, because one thing that we also have to remember is there's technological change. And shaping technological change is one way of converging trade theory and growth theory. Technology gives us the opportunity to produce, as Mike Milken once told me, Bill, it's cheaper to produce sneakers in Atlanta than it is in China if you have the right technology in place. And so I think one of the things that we're going to see is the use of technology to drive a lot of the industrial policy that both President Biden and President Trump want to do, which is to say reshape the supply routes, don't depend on single sources, where their efficiency comes at a cost, and at a cost not just to the U.S. but to Europe as well. And I think Europe and the United States are trying to replicate these supply chains. If I were China, I'd be more afraid of the European tariffs that they're going to be putting in to protect their auto industries and their industrial base, their pharmaceuticals, than the United States tariffs. Because I think President Trump is much more willing to negotiate. You bring jobs to the United States, you invest in the United States, and you can circumvent our tariffs. If you don't do that and try to insist on competing with our strategic industries, you're going to be hit with not just 50, but 100% tariffs.
We went too long. Bill Lee, don't be a stranger. We'll do this again soon. With the Milken Institute.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Your daily look at the front pages of Lisa Mateo Hour. Lisa, what do you have?
Okay, it was a little bit of a slow day today. I was struggling, but I did find some good ones. This is in the Wall Street Journal. It's a growing trend among couples. They're buying the house now and they're getting married later. So that is the recent trend. 2023, 555,000 unmarried couples said they bought their home in the previous year, and that's up 46% from 10 years earlier. So more people doing it, but yes, there's the risk. What if you break up? What if something happens to the other partner? So family law attorneys, they are busy. They're getting all these questions about it. Prenup cohabitation agreements can cost like $3,000. So they're saying people really have to consider
is the new thing you sell the house before you get divorced?
See, those are questions you have to ask,
I think the big issue is I don't know how young people afford a home. I mean, home affordability is out of control. The prices are high. Now interest rates, mortgage rates are high. I haven't seen a correction in the housing market. I'm not sure where.
And that's why they're going for the home instead of paying for the wedding. So now
exactly.
what goes first, the wedding or the home?
Yeah, you got to.
And then there's the destination wedding. There's a great cartoon this weekend.
Oh, yes.
About the destination wedding.
Oh.
I've had a couple recently where I'm going, you got to be kidding me.
It's tough because you as the guest have to fork up all this money to
it's
go.
for people without kids is sort of, one guy wanted to have it in tuition. It's a city in Southeast Asia or something. Next.
Yes, we talked about it. Wicked Gladiator 2, right? The box office. How much it did? $170 million between both of them, okay? Not close to the $245 that, the Barbenheimer brought in. But it still brought in a significant amount. But what the New York Times was interesting is that they talked about the money behind it, like the big marketing cost. How much Wicked's Universal, one of the largest marketing campaigns in Hollywood history. I mean, they started back in February at the Super Bowl, and you're going to see more Wicked at the Thanksgiving Day parade at Macy's on Thursday.
Right?
So for brand partnerships. I mean, you saw the Wicked dolls, the drinks at Starbucks, the Wicked Lego sets, the Wicked cardigans at Target. I mean, it's unbelievable. Even Gladiator 2, they put a lot of partnerships.
Did you miss Russell Crowe? Cut to the chase.
Oh, I did. The new guy was good, though. The new guy, Mescal, I think is his last name. but he was
Pedro
really good.
Pascal, yep.
Yes, he was really good. And
Well,
Denzel was phenomenal.
Wicked Part 2 is scheduled for release
Yes,
next year.
Can you believe it? My daughter was so excited.
This is like, I can't remember, Game of Thrones or whatever. They make two of the movies at the same time.
Is that what they did here?
I think that's what they do, so they can
Probably
come out
save
with a
some money,
second
maybe.
one.
Yep.
Yeah,
But that's
the budgets are huge.
I mean,
Paul.
Gladiator 2
Budgets
cost
are
at
huge.
least $350 million to make and market. So
Yes.
that's a big number.
How do you account for $100 million of Ariana Grande,
Exactly.
prancing around?
Don't know. I mean,
Is
this
it
is
like
gonna.
an expense deduction?
I don't know. One of the questions I have is, how are these things going to play in China, if at all? Because that had
If at all,
become a
yeah.
market right in line with the size of the U.S. market, and Hollywood made a lot of money over the last 20 years in China. I'm not sure if that's still the case.
Next.
But it is. It's a big thing. Okay, so you mentioned China.
Yes.
So we'll switch there. China, no longer the main source of U.S. imports, but tariffs really haven't slowed America's demand for foreign goods. I mean, this was really in the Wall Street Journal, too. Mexico took the top spot last year, and it's a shift started in 2018. Like, we saw it starting to change there with then President Trump, and now with his promise to impose another round of tariffs. What type of goods are we talking about? Smartphones, one of the big things. South Korea, India, Korea, Vietnam, 42% increase from 6 years earlier. Then the value of laptops, tablets imported from Vietnam, Taiwan, that's also on the rise too.
John Micklethwaite, with his interview with President-elect Trump in Chicago before the election, and Trump talked about the magnitude of tariffs to force jobs to America. But Paul, that's not what we're hearing from Secretary Bessent, according to Henrietta Trace. He wants teensy-weensy tariff increases.
Yeah, it's interesting.
That's the debate.
And the numbers don't lie. Last year, products coming from China made up 14% of all imported goods. That's the lowest share in nearly 2 decades. But many of the goods arriving from factories in Mexico and Vietnam, they still include components that originate in China.
Exactly.
So I don't know how this all works.
Vietnam is like 25% of what they output comes to America now.
Yep.
It's complex would be my answer, folks.
Yep.
Do you have anything else?
I do.
The New York Giants or Barclay of the Eagles?
No, please. That was very sad. Okay, Chinese fast fashion retailer in the spotlight. So parents are, if you're getting stuff for your kids, sometimes they turn to these cheap retailers like Temu, like AliExpress, like Shein. But the government of South Korea putting out this warning, hey, these clothes can have toxic substances. So this is what they're putting out the warning for. They tested 26 pieces of children's winter wear.
Yeah.
And 7 of them contain these toxic substances. But they're saying one of them, there was this jacket from Temu, 622
Lisa.
times a legal limit of toxic
Can
substances.
I do this with Fendi?
Can you do it? Not going to work. Not going to
You
work.
mentioned Milan last week as well. Lisa, Mateo, thank you so much for the newspapers today.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.